after the AGM, after the dividend has or hasn't been paid, then go and ask, not me, not anybody from the company, an independently commissioned analyst. And there are firms that do this type of research or this type of interview with fund managers and the analysts. Obviously, you have to help them give the right contacts. And obviously, the larger the audience, the more meaningful will be the response. And it is their job to actually undertake the interviews either face-to-face, which is quite rare, more likely by telephone, or even by email. They collate all the responses. We typically went to an audience of about 100. We typically got responses from probably 60 or so. Pretty good response rate, because we used to ask the shareholders, look, we do this for your purpose. Please, when you're approached, give them however much time they need. Give honest answers. It will be verbatim. It won't be disclosed, so it's confidential. It won't say Fidelity thinks IR at SGX is rubbish. So you don't know who is saying what. Sometimes you even get nice comments. Unfortunately, you don't know who's making the nice comment. But the point is, it's independent, it's done thoroughly, and it's done on a regular basis. You can't do it once and then stop it. We did it from 03 to the time that I left. Every year it developed, every year it evolved into something more meaningful. So by the time the new chairman came in, second chairman at SGX, he was receiving an annual perception study on whether things were working or not. I never saw the one on the ASX transaction, by the way. But that's by the by. But at least he was getting an independent view. You're right. Every day I can give feedback. Every day my boss can give feedback on me. Every day my boss can go to the shareholders when he meets them, if he wants to, and ask, how's the IR team doing? Is John doing a good job? So you're right, for my personal KPI, key performance indicator, the feedback from key shareholders was very important, and that could be provided informally or even formally by somebody calling the key shareholders. We have a variety of KPIs. The main one for me as the head of IR was the share register analysis, the quality of the share register. It had to be geographically balanced, no too big shareholder, no bigger than 3 to 5%, and it had to be balanced in terms of institutional versus retail, because the retail market is very important in Singapore, so we were not to neglect the retail market. But importantly, it included the perception study, which was both qualitative and quantitative, so narrative written on us, and then there was a scoring system by providing analysis versus our peers. So the questions were asked versus Hong Kong Exchange, versus SET, versus Malaysia. So you could get a view of whether we were average, below average, a bit better than average. And over time, it became quite sophisticated and it became quite meaningful. But it was done over time and it was done consistently. So that's the way that the board got their feedback, as well as getting the 6-monthly update from me on the investment community. Anybody got any questions at this point? Because I'm sort of rattling along. I'm supposed to be pretty close to wrapping up on my part before Sarek takes over. I'll go on a bit more because we've obviously got another hour. We have plenty of time for Q&A. But if there is anything that I'm saying and you think, well, hang on, what about this? Please just put your hand up. I'm very much welcome a question. By the way, in terms of IR teams, presumably you all have your own budgets. Is that generally the case? So the head of IR has his own budget, so you can go and do things like perception studies. You can go and do the shareholder register analysis if you need it to find out who's on the share register. You can go and organise that investor day for the retail investors, all under the IR budget with you in charge. Ideally, that should be the case because you're addressing those audiences. For me, it took a number of years. First year I worked in IR, we were seen as a little cost center, part of the Chief Financial Officer's team. As we got a little more sophisticated, as we realized we were having to address different audiences, our budget and our team got bigger. By the time I left, my budget had gone up something like 5-fold from 2003 to 2012, and my team was probably, instead of 1.5 people, was 3 people. So I suppose that's a That's a doubling in size, isn't it? I know most IR teams are relatively small, but I know most IR teams are generally seen as just an add-on. Nothing could be further from the truth for all the reasons that I've just said. You're the key point person for a listed company in any market that you operate in. Same in the UK. Sadly, same in the UK. Small teams, small budgets, same issues, same bosses, same difficulties, right? I can say what I like now because I'm not an IR officer, I don't work for a company, and I'm just sharing with you what I do think now, and I can be less politically correct than Richard used to hear me when I used to talk at the exchange.
But how do you convince your CEOs and CFO to give you, 5-folds of the budget from just the past?
I'm going to ask Richard to answer that because he has actually been in an IRO longer than I have. He's worked in more companies than I have, so he's had to address that issue over and over again. For me, my answer was just being in the exchange longer than anybody else. So eventually, by the time we got to CEO number 3, Chief Financial Officer number 6, Chairman number 2, actually I was the only person that's been there from the time we listed to the time that I left. So people either believed me or ignored me, right? So that was just sheer persistence. Richard, you moved to a new company 3 and a bit years ago. I mean, how do you deal with a new boss when you know what you should be doing, but actually the boss either has no clue or to be fair, has budget constraints?
Well, the problem is always the budget, isn't it? I mean, you have
Hey, Richard, hold on a second.
If you have enough money, you can do whatever you want. But we don't do surveys. I actually do surveys by writing directly to analysts, so it's not independent. But now and again, analysts will receive a general email with 3 questions because we need to know, should we adjust the size of our PowerPoint, or should we adjust this or adjust that? But generally, we do write a budget at the beginning of the year, and it includes everything that we intend to do throughout the year, and then after that, CEO tends to be hands-off. Once it's approved, then you just go ahead and do it. But for a lot of companies in Thailand, I've heard, even bigger companies than ours, have less of a budget. At Thai Bev, which was very cash-rich, the budget there was maybe 3 times what it is in this company, because they just had the money available. But surveys, independent surveys, were not sanctioned. And because I remember I was in one Thai company, which will remain nameless, that did an independent survey, and when they saw the feedback from the results, the chairman said, "This cannot be true. I don't believe it. Throw it away." So eventually they did it again and again, and they kept getting the same feedback, so they understood that what they were perceiving was actually wrong, and what the feedback that was given was actually quite helpful. But it's just a case that most CEOs in Thailand would think that an independent survey was rather a waste of money. Just go out there and ask people what they think. And to be honest, we do ask fund managers. Sometimes with the CEOs in a meeting when we're in Hong Kong or something, I will walk out of the room as they're leaving, follow them into the corridor and say, "Oh, what do you really think?" And because they know me, they will tell me what they really think. "Oh, that was bullshit," or whatever. Couldn't believe what he was saying, or whatever. And then I have to think of a nice way to write a report at the end of the roadshow saying the feedback was quite negative on some aspects. So it's possible, if you're in any Thai company, to do your own. It's not independent, but as long as you're honest, and as long as you can persuade the fund manager. There are analysts that are very honest with you if you want them to be, but they're very worried at the beginning. One thing they're worried about is that you'll take it badly, so you have to convince them that you're not going to take it badly. We have a policy that in America, if you have a sell in the company, you don't get invited to analyst meetings. So we have a policy that we don't care what's the call, we care whether you've got the numbers right, whether you understand the strategy, and after that you can say what you want. And so very often we have a good relationship based on the fact that we don't blame them for having a negative feeling, but we want to know if it's based on the facts or whether it's just a perception that they've misunderstood something. And then we report back to the CEO with usually a short email report that is quite honest, and for which sometimes we don't get a reply, but we provide it, and we're very, very straight. And we don't say it was rubbish, but we say it was poorly received or something tactical like that. And so with the budget, you need to make budget for everything that you need at the beginning of the year, plus a lot more, and wait for it to be cut. And then end up with what you actually wanted in the first place, which is usually the key to success. So you have to know that we're not going to be doing roadshows to Alaska anytime soon. But ask for it. When it's cut, don't be surprised, you see. A lot of small companies in Thailand, I would say small market cap companies, do 0 foreign roadshows. And the problem is that they would never get a budget because they're a small market cap company in the first place. But for them, it's more important than for the CEO to do the roadshow, because they're the guy usually who everything depends on for a very small company. And it's much more important for the CEO to do IR in the smaller companies, I think, because they're much more aware of everything that goes on. But in a very big company like AIS or SCB or something large, it's maybe not possible for the CEO to know everything, and then you need to start thinking about, should I budget for line managers to go with me? Should I budget for the head of a niche section to go with me sometimes, rather than the CEO? And then just split the meeting conversation and just say, this is the general overview, and we have somebody here who's going to talk about our COGS section, and he's going to let you know what's going on in that area. So the budget should be requested, perhaps for slightly more than you require, because it's in Thailand it's always going to be the same. They're going to cut your budget. Nobody's disagreeing. They're going to cut your budget no matter what you ask for. So ask for more than you really need. That's the clue.
So you're the worst type of employee to deal with, right?
Yeah.
He says, be truthful, then he asks for a bigger budget.
No, if I can get it, I'll accept it. You see, you don't ask for something that you can't implement. If you can implement a roadshow to Alaska, that's fine. What I'm saying is that you ask for more than you really think is the bare minimum that you require. And in all honesty, if you can get all of it, that's fine. But don't expect to get all of it, that's all. And make sure that what you end up with is what you really, really, really need to do in the first place. So honesty is simply saying, I would like to do all of this. But if you ask me, do you need to do all that, then maybe it's a different answer.
The advantage Richard has is he's very experienced, he's very credible. He mentioned a couple of really key points. He clearly manages his relationships very well. And talking about the feedback that he gets, it's true. You can go to brokers, you can go to fund managers who you've been working with for years and years and say, look, are we coming across well? Did you understand? And they'll tell you. So he's absolutely right. It's then a question of how you then feed that back internally, which I think can be a bit of a challenge. You also mentioned policy. I don't know how many of you in companies actually have an IR policy. So the IR team is actually charged with having like standard operating procedures. We did at SGX. I walk out the door when I did walk out the door, but left behind was a very clear modus operandi, a very clear document on who should be in IR, qualifications, how they're supposed to behave, what's expected of them when it comes to disclosure, how they're supposed to actually disclose, what can go wrong, what happens if you do accidentally send out the financial results before your briefing, we've done that. What happens if your website is completely out of date and not in line with the latest media release, we've done that too. So there was a document for what's the person that comes after you? successor, right? Thank you. There's a document for my successor to literally, frankly, follow. I mean, how well he or she follows it is clearly up to him and the new CFO. But at least IR was established. There was a modus operandi, a structure in place. There was a very clear reporting line. There was a discrete budget. There were elements of the IR calendar on an annual basis that were expected, including what we required for where we were in terms of our development. And Richard's right. If you're a small company starting out, it's different. Think of KPIs. You can't have the same KPIs as a developed company. When we first started IR at the exchange, it was number of investor meetings we had. It had to increase, including targeting bigger shareholders who invested in Hong Kong Exchange but not Singapore Exchange. It included number of analysts covering Singapore Exchange. When we first started, there were 5. When I left, there were 25. By the time I left, it included the calls they were making, buy, hold, or sell. Not that we were upset if they had a different call. That's their problem, right? That's an external factor. That's not my business. My business is to make sure they understand what we're trying to get across and be clear and consistent. They decide, actually, it's time to sell SGX, so be it. More of a challenge for me next time, and often we just go on the road with them and let them be convinced by us that we knew what we were doing. So all types of KPIs that are more relevant depending on where you are in your evolution as IR. By the time I left, the most sophisticated KPI we had was we were expected to get the IR earnings forecasts within 20% of the median. So if you lined up the 25 forecasts of our analysts, there's a median, isn't there? Remind me what the median is. It's basically the midpoint, isn't it? Exactly. So if you lined up the 25 earnings forecasts going forward, so today would be the 2013 earnings forecast, we as a team were expected to communicate, cajole, pressurize, do what we had to do to ensure no outliers. You know what outliers are. You get some ridiculous analyst that says you're going to break all world records, and we had a lot of those. And then you get the horrible people who never believe a word you say. In fact, one of my best friends never believed a word I said. So he was always an outlier. He was always coming in well below the forecast. He loved doing that. And it's so embarrassing because we're actually very good friends from a long time back. But he could never believe what I said. He said, John, you're so convincing. I just can't believe you. I'm not going to believe it. So he consistently failed all the way from $1.10 at IPO, $17.20 at our peak, probably half that today, but he was the most miserable analyst in Singapore, but we had a wonderful relationship and we laughed all the way to the bank and all the way back down again. And that's just the way it is. But by the end, we were pretty good at ensuring that that consensus was pretty close, within 25% either side of the median. That's pretty sophisticated. Did I say 20 or 25? Yeah, roughly, right? So as long as management saw that we were working hard to get rid of the outliers, which they found very annoying, then they were happy. And that was actually one of our KPIs. So pretty sophisticated. But thanks for sharing that, Richard. I'm just going to rattle on. Been through all this. I hope these are useful slides. I mean, this is what we use in London when we're addressing IROs generally. And elements of this would come out, for example, in our professional development. And it isn't just for new IROs. It's also making, I hope, existing IROs just think a little more. Even Richard. I mean, it's got a report to the board there. I've spoken about that. We know that. I think you all know this as well. The interesting thing is about how to do shareholder register analysis. I asked whether you actually do that because, of course, you can get help, particularly when it comes to nominees. You don't know who's behind the holding. You don't know who the beneficial owner is. You don't know who the decision maker is. You need to know because at AGM, if the votes are going against you in terms of your resolutions, and in Britain, we had something called the shareholder spring. Anybody heard of the shareholder spring? Just one of these counter attacks from the investment community, particularly relating, of course, to remuneration. You know, banks screwed up, other companies continue to pay themselves a lot, at least the executives. So we had the shareholder spring where a lot of companies had their remuneration packages voted against. In the UK, there's binding votes. You have to get at least half your shareholders to agree the remuneration. That's pretty tough, 50%. So you've got to know who's turning up, and you've got to know who the decision makers are. So it does go back to the IR officer to know who's on that shareholder register. Of course, you know at the beginning, at the IPO, because you help place the shares. You help identify who you're trying to work with. There's a very famous quote from Warren Buffett, which goes that the purpose of IR is to attract the shareholders you never want to lose. Actually, if you get it right at IPO when you first go public, and you can then keep on top of it, of course it's easy. But you know what happens, everybody gets excited leading into the IPO, particularly the bankers, because they're going to get big fees. And then once you've got the money, the capital from the investors, you tend to, not you, not IR, but your bosses, tend to think, so what, we've got the money now. And then the IR activity drops off until you need them again. Then you go and bid for the Australian securities market, and you desperately need IR, and you desperately need those shareholders again. If you don't know who they are, you don't know who you're talking to. You had a bit of a misfire, I think, in many ways, because management thought they were talking to somebody, we thought we were talking to somebody else, and neither of the two quite gelled, so we didn't quite get where we wanted to. But it's important to remember that. Just going through, because I'm wary of time, and I want Prince Sarek to have his slot as well. You'll all be pretty familiar with this, to be honest. I mentioned that the fund management industry is changing. I know as good IROs, you'll appreciate that you're a different type of investment, right? You might be a growth company, you might be a value company, or as in the case of my former company, we were a yield company. Pretty steady earnings, at least at a core basis, pretty obvious fixed cost base, and then it was very much a question of how much we earned over and above our core earnings. But what we established very early was that we were a dividend yield stock. Yield of probably between 4 and 4.5%, which in Singapore is excellent. And we paid on a quarterly basis, believe it or not. So you got a quarterly dividend, which is great if you need the income as a shareholder. And it was very clear to the market from relatively early on, that's the type of stock we were. In very good times, you even got bigger dividends over and above what we called the, I'm trying to remember what we called it, base dividend we called it. So quarterly you got a base dividend from memory of 4 cents a share. So on an annual basis, 16 cents a share. And clearly you expected more than that, which generally you got. Hence, I think for a period where we were on a good roll, pre-crisis, you know, we could do no wrong. And we were also affected by external factors again, where there was a lot of M&A, and everybody kept thinking NASDAQ was going to take us over, London was going to take us over, so our share price went crazy. Very exciting to be part of, but reality bites, of course. It all came tumbling down. But they're still at $7, $8, I think. Given they listed at $1.10, they're still looking pretty good on the back of a very good yield story. So decide what sort of stock you are, and then try and find the investors that match. Don't necessarily see everybody. Don't necessarily expect everybody. As I said, the purpose of IR is to attract the shareholders, just like with customers. You know, you want certain customers, you don't want every customer, right? Because you can't deal with every customer, and not every customer wants you either, that you never want to lose. I presume in Thailand the retail market is very important. In Singapore it is. So by the time I left, our retail shareholder base had gone up 5-fold. 10,000 retail investors to 55,000 retail investors. So big, so important on the share register that we even ended up having an annual IR Open Day, which was targeted at Joe Public, meaning the individual investors, where they're invited into the exchange, got to meet management in our environment, treated like we treated big shareholders, given a presentation, given a lovely lunch, and made to feel important. When we got to AGM, the result was they were better behaved. I'm not saying that was the purpose of the IR Open Day, I'm saying it had a positive effect. If you knew what AGMs were like at SGX at the beginning, you'll understand why we did what we did. To their credit, they've continued with the IR Open Day, even though Singaporean investors behave a little better than they did when we first